Hello and welcome to the latest episode of Wall Street Wildlife. 3 big topics for today. Christoph, what are we talking about?
We are talking about your majestic 50 company portfolio overview.
I've got 3 lessons learned I'm going to relate.
Yes, sir. And you, in your time in the casinos and at the poker tables, said something potentially very dangerous or very wise, a mantra to live by. You'll talk about that. And we will have the King of the Jungle portfolio review.
And we'll tackle a slightly more serious topic as well as the fun Neuralink. What's coming out of that lab? What have they just done? And what potential impacts is it going to have on society?
The future is now. So, Badger, you have been diligently, consistently, and really entertainingly posting on X and Instagram your portfolio holdings from lowest position up to bigger positions.
And it has been a painful start to the journey because by necessity, I've spent about 20 days wading through all of my losses. So I feel like a bit of an idiot on platforms like TikTok and Instagram because I'm basically here I am every day telling people how I've lost buckets and buckets of money. At least the people on X, of which there are nearly 7,000 now, excellent, know that I am a serious investor, not just somebody who throws the money in the bin.
Yeah, but you can't be an investor without losing. So let's acknowledge that up front. It's not so much whether you're going to lose, it's to what extent you can mitigate the losses, right?
Yeah. When you as you're a growth investor, right? I mean, you can actually have 8 losing positions, and one winner. That winner, if it's a 9-bagger, 10-bagger, it covers the losses of all the rest. So it's a very asymmetric bet when you're investing in smaller companies with high growth potential.
As we say this, I think this is a more important point than I initially realized. My guess is most investors who are on the sidelines or only deal with index funds, say, or not at all, they're scared of picking a losing company because they know that the odds are not with you, right? So hearing you go over your portfolio review, going through all the investments that have lost you money, might that send the wrong message?
I think the important thing is to learn from each one, and I will share a couple of learning points from the first 25 days. And I'm not trying to send a message to anybody. I'm just doing a 50-day review of everything I own and some stuff I previously owned. So I guess kind of wait for the conclusion, and then I'll try and frame it in a nice package that makes it less scary, perhaps, than just a litany of failures.
Yeah. So can you take us through some of these? So actually, I'll say it might be overwhelming. You're 50 companies to keep track of is a lot, and I don't think the intention here is to confuse people with what these companies do, and it could seem overwhelming. However, my sense is that because you know these companies pretty well, and you could talk about them in terms of the context of your own personal journey with them, tell us what surprised you the most about your overview so far.
Yeah, so I suppose I'll pick out 3 lessons, and I think I knew at least 2 of these, and then one I've sort of run into something new doing the review. Like I do this. I've been doing this kind of annually-ish for the last 5 or 6 years. The last 2 years, I've done it in public on X and now on all the other platforms. So maybe the first one, which is my biggest dollar loss lifetime, is C Limited. And for kind of complicated tax reasons, I wanted to invest in C for a couple of years, and I watched my brother invest in it and do really well. And I was like, come on, I want to be able to invest in this thing. I need to open this particular kind of account that I didn't have. So when I finally got round to opening that account, which required moving some pension money around, basically, I thought, well, I know this company. I've been tracking it for years. Let's just get stuck in with a full position, which for me is about 6%. So that's like 6% of a relatively large pot is still quite a large number. And so I dive straight in at 6%, as opposed to normally building a position slowly. I'd normally buy, like I say, a 2% position, let it run for a couple of quarters, monitor the thesis, add, give it a year, add again. That'd be my normal process. I added the whole 6% in one go, and literally I don't know, like 2 or 3 months later, boom, the ass fell out of C Limited because of poor execution, and that chunk of cash was down over 80%. And probably my pension manager was looking at me and going, what an effing idiot this guy is. He's just blown his pension and his life up. I haven't. That was, they don't know about another bunch of accounts that are more material than that one.
Hey, Badger, could I pause you for 1 second? What is it that made you so excited about this company? Is there anything, because you are a very measured, reasonable, furry critter most of the time. So it's unusual to hear you talk about, not needing, but, this exuberance for C Limited. Why?
Like I love the e-commerce sector, and some of my biggest holdings are Amazon at the time, Shopify, Mercado Libre today is probably top 2 or 3 highest conviction investments, and C Limited just seemed like Southeast Asia's version of those to me, with its e-commerce dominance. It was offering financial services that made a lot of sense. It had a really interesting angle at the time, an arm of the company called Garena, which was like digital entertainment, video games, essentially. Sounds a bit trite, but that was actually funding a lot of the e-commerce growth. It seemed like this great flywheel. But they executed badly. They got a bit big for their boots, and instead of investing locally in building an impenetrable moat around logistics, which is what companies like Amazon were doing and still are doing, and Mercado Libre are doing in South America, instead C tried to take over the world, and they got their arms and legs into countries like Poland, France. They were talking about the UK. They started building a presence in South America to compete with Mercado Libre, and that strategy blew up. They didn't have a competitive advantage in those markets. They didn't understand those markets, and it really eroded margins, and shareholders didn't like it. So that sent the share price, the multiple, tumbling, which is where I lost my pants on that investment.
Yeah, looking at the chart, it's if we zoom out the entirety of its history, it looks like a triangle.
Mm-hmm.
which is it's good if you're on the left leg, but if you're on the other side of that leg, it's not as pleasant.
I am a fan of the company still, and I have added to it actually a few months ago, and I do think it's got potential. Like the threading the needle that their CEO Forrest Lee needs to achieve now is to return the company to sustainable, profitable growth. And so that means focusing on core markets. They slash and burned costs about 6 months, 9 months ago, and now they're starting to cautiously reinvest in things like sales and marketing and building their logistics capability. In the recent earnings, they talked about some of the benefits of some of those reinvestments they're starting to make. So I do think the company's doing a good job of a turnaround, and I do think it's probably quite a reasonable valuation. But no argument, this is a very high-risk position today.
It's in my too hard bucket.
Yeah, I get that.
And by that, sometimes even if you've been investing for a long time, I think it's humbling to say, not my region of the world, too many things going on. I don't have any reason to feel confidence because, like that, not living there. No idea. Everything is hearsay. So
yeah, I agree. But then I could say the same about Mercado Libre. Like I've visited South America, but that's about the extent of it. Mm-hmm. I've tried to use the app, and I don't speak any Spanish, so I struggled with it. But I still consider it a high conviction pick.
Although that feels different to me, and I wonder why. To me, the Amazon of South America, it's fantastic financial results over so many years, really dedicated and focused team. That feels like the mission is clear, and they're mirroring Amazon and just doing that better. Feels different to me than C Limited, because maybe the game sector and the social platform. So good point, right? You don't need to live somewhere. It helps, but also the numbers don't lie. So when you look at Mercado Libre's chart, it's up and to the right. C's is not. So additional complexity.
Yeah. That's interesting, actually, because that takes me on to the second lesson I've learned during the portfolio review. And this is a company I tweeted about today as we're recording on the 25th of March. This is WIZEY, the sort of international banking foreign exchange experts. And something I recognize very strongly is I really, really understand this company. And it's because I'm a customer. I'm not just I was a customer before I was a shareholder. And I was so impressed with the capability and the service that I thought I need to buy stock in this company. And it's becoming a core holding. So that's very different to Mercado Libre and C, where like I'm not a customer and probably never will be. It does give you a great lens into what a company does. And I try and be a customer of all the companies I own if I can, probably apart from my medical technology companies. I try and avoid those as long as I can.
Awesome. And the third lesson?
You've got to track the metrics. So a company I've owned for some time is Cloudflare, ticker NET. Mm-hmm. And they're kind of a cybersecurity and edge computing leader. And I think I do understand the company. Like I've used their tools as a free user. I understand what's going on. But you've got to study the financials. And one thing I hadn't realized until I did my portfolio review of that one was their DBNR is collapsing. So just to explain what that is, dollar-based net retention. And it's a good metric to track for SaaS companies, software as a service companies. It's basically from your existing customer base, for every dollar they spent last year, are they spending like $1.20, $1.30 this year? It's showing real customers are getting real economic value, and thus they're giving you more wallet share. Like it's a real kind of show me the money metric. And their DBNR is now down to 115%, which means it's still increasing, but really you're looking for like 120% plus. So it's kind of showing either their customers are maxing out on their use of the platform, or maybe they're finding alternative solutions. So it's under the microscope for me now. I'll be tracking this one pretty carefully for the next couple of quarters to make sure it's on track. And if it's not, like I'm not afraid to cut bait with this.
Oh, that's interesting. I know Cloudflare pretty well, but I wonder. Some of this stuff is really complicated in the sense that there's so many metrics to follow, and Cloudflare is, I think its mission statement is providing inventing a better internet. Everything from physical locations of the servers being all over the world to the security angle. It's all interwoven. And I wonder, Badger, if the number that the dollar net based retention rate in isolation, is that enough of a view in a company to say, we have serious issues, especially as it's expanding and companies are in many different stages of growth? That's point one. And the second point I want to ask you about is, you said in passing that the number you want is about 120. Is that a rule, or is that kind of relative to the top tier performers?
There's a bunch of metrics you should look at, and that's just one of the ones I look at for that company. And I said probably it's not the absolute number. It's probably the trajectory of that number is coming down, and it's coming down a little faster than I'd like for what is supposed to still be a growth company that's relatively early stage. The reason that's so scary for an investor is particularly these kind of mid-cap tech companies, SaaS companies. They're valued so much more on their future potential than like their earnings today. And so if investors start to get a sense that growth is slowing and these companies are entering like a maturity phase sooner than you would expect, then that's going to smash the valuation materially. So that's why I'm just trying to get like a leading metric that gives me a sense of if that might be coming, so I can try and basically get out before the market catches wind. That's the only thing.
That's right.
There's a whole bunch of other financial metrics I track, and they're all healthy, but this is one kind of yellow flag, let's say.
And Cloudflare in particular has a history where it was probably the most wildly valued company in the entire stock market during the 2021 bull, before interest rates start creeping up. And the stock it lost. I mean, I could look it up, but it lost over 50% in its value.
Well, like 70 or 80%, I think. This is in my tweet for this one. Like, I'm not a trader, but I describe myself as trading this one. It's the only one of the only stocks where I've bought a position. I sold a big chunk of my position actually like a month before the triangle turned south, luckily, and then I've re-added to it since then, kind of near the base. So I've kind of played this one by luck, perhaps more than judgment, pretty smartly.
So why still hold it? You have this you have this legitimate flag. It's still very expensive. The market is very, very exuberant still. Why? And I imagine you have other companies in the cybersecurity mega trend that you don't have these flags about. What's your rationale for not selling right now?
Like, it's still providing an essential service, and it still has potential to be like essentially the next hyperscaler. Like, that's how they were sort of positioning themselves to be almost a challenger in one domain to things like GCP and AWS and Azure. But it's primarily, in my mind, it's a cybersecurity company. And but this is my strongest held conviction that cybersecurity stocks are going to continue to do incredibly well from here, even though arguably they're overvalued. I've got such a big position in CrowdStrike. I've got a smaller position now in Zscaler, quite a new addition. I've got a smaller position still in Palo Alto Networks, which is probably arguably the weakest of the four. And then Cloudflare is my fourth one, which I've got kind of on a short rope, let's say. If I were to sell the ones I don't necessarily have full conviction in, which would be Palo Alto and Cloudflare, well, I'm left with just two, and two is not really enough of a basket for me.
Yeah, that's...
Let me say it another way. I would rather own a middling company in an industry I'm certain is going to expand. I would rather hold that than a fantastic company in an industry I think is just going to kind of poodle along.
Yeah. Yeah, I really appreciate the basket approach, but I also appreciate the history of a company that is so richly valued. And that number you mentioned, net dollar-based retention rate, may or may not be a canary in the coal mine. So right. It's interesting for me, in this moment of my investing journey, I'm mostly sitting out. Almost all of my investments are in crypto or small caps, which I don't have, necessarily much faith in. The only real meaning excellent company that I own is Tesla. So I'm sort of looking at your portfolio review and these decisions to add, sell, allocate from a, I think, fairly neutral standpoint, because I could, should I add, should I buy, I can't sell. And your description of Cloudflare at the moment does not convince me to add shares. And that's one, I think, of the fallacies that most investors, it's very understandable, succumb to, is because if you already own it, it's harder to sell it because you're attached to it. The question I try to flip around is, if you did not own it today, would you buy it? And I think, rationally speaking, since you have it in your portfolio, if you're not succumbing to bias, would be you would, in this moment, buy shares of Cloudflare if you did not already own them.
It's a good question, and I do challenge myself with that one. Like, I do have transaction costs and other things, so there is a little bit of a bias towards inaction. This is so on the edge. This is probably one I wouldn't buy if I didn't own it. Yeah, but this is there's very few where they sort of sit in such a grey zone. But this is probably one of those.
Yeah, that's an interesting insight, and it's complicated. The feeling on the inside, kind of knowing this this tension exists. Yeah. So,
if I just the nature of the way my accounts work, because it's this weird British tax efficient thing that means I have to settle into sterling. I can't settle into dollars. So if I were to buy something and then subsequently sell it, I'm going to pay the FX rate plus the bid offer spread, and then when I sell, I'm going to pay the bid offer spread and then the FX rate again. So overall, that adds about I don't know, probably 3 to 4% to my transaction cost.
Yeah.
So stuff that sits in the grey, like, I don't know, like, yeah, it's a problem that most investors won't have, but it's good. It's a kind of a good problem because it always, I have to be really sure before I hit that trade button. And that's why, I trade far less frequently than most people.
Makes sense. And that served you well. Less, right? Less is more. I wish I had some British tax to have kept me from selling at the wrong time.
Well, like, I mean, if you want some help, like every time you transact, if you just send me 5% in cash, and then that'll be your waiting. There you go.
That's brilliant.
Yeah,
that's brilliant. All right, so Badger, something else fascinating happened to you in your stay in Tahoe. You were minding your own business, just keeping your eyes focused, right, on business, and all of a sudden, lo and behold, you find yourself sitting at a table poker game. And what do I get at 3 a.m? But a photo showing your not royal flush, straight flush, right? It wasn't quite royal, but it was straight and it was flushy. So, and with a quote on X saying, "Money won is 10 times sweeter than money earned." And I heard you describe this as your life mantra.
Well, certainly when I play poker with my buddies, if I can, winning their money the gloating that comes with that. That's far more sweet than just winning money from a random person or earning money from the toil of your labors in a job.
It does feel like you're taking money from the evil house, right? In the case of casino, right?
But even then, like, I'm looking forward to winning your money in Austin this week. That'll be sweet money.
Man, that's gonna be so unfair. I haven't played cards in over a couple of years, and you've been rounding now pretty diligently. So, oh boy, I feel like a fat, overweight, out of shape person, towing the line on the track. So this will be. I gotta get a couple of stretches in before. Anyway, follow-up question, Badger. Do you think there's a sense in which people like us who enjoy not the thrill of victory, but like the competitive nature and the kind of personalized interactions when you're winning versus just, money piling up, do you think that's one of the draws for us and maybe others for why investing is such a fascinating lifelong project? That there's something sweeter in a sense to winning your money through hard work and analysis and discipline, as opposed to just, say, buying a fund and checking on it 10 years later?
Yeah, that's interesting, isn't it? I suppose when I got started, personal anecdote, I used to sort of co-invest with my buddy Albert, my podcast co-host from Telescope Investing years ago, and he's still, my closest friend. And we used to check in with each other on how we would do our results, and I called it the game. And the game was to basically have more money than the other person. Mm-hmm. And Albert won the game because he retired about 2 years before I did. But the game is still ongoing, even if he doesn't admit to it. The game is still ongoing, and I'm still growing faster than he is, and I will pass him in the game at some point. And that's actually more important to me in some ways, daft, than the actual, the real dollars and the fact that they're funding like a very fun lifestyle right now. So yeah, gamifying stuff can be good as well, because it maybe it can instill better behaviors and thinking. You don't suddenly panic and go like, holy F, I've just lost like more than a year's salary on this C Limited thing, and suddenly, go crying yourself to sleep. You're just like, oh, I took a gamble in the game, it didn't pay off, but I've got these other bets over here. You can remain focused on perhaps the right behaviors that are going to drive you to long-term success.
This is an important point. I didn't expect our conversation to go this way, but accountability. We know the phenomena of how much easier it is to go to the gym when somebody is going to be there at 6 a.m. waiting for you. I mean, I, for one, like to think of myself as a person who is true to their word, so I'm going to show up anyway, all the time or 99% of the time. But when I know somebody is with me on the journey, it actually makes it easier to show up. There's a sense of looking forward to doing the workout. I think your insight about gamifying investing, especially if you're a new investor and it feels scary to you to go on this journey all alone, don't. Find somebody that you are close to and start small and turn it into a game. And it's amazing how much you care, even though the stakes might not be that big. We could testify to this with our current King of the Jungle portfolio challenge, can't we?
For real, yeah.
which which ain't going so good for Monkey. Poor humble Monkey. Every decision he makes, not every decision, most of the decisions I've made so far have not yet paid off, and the gap, the delta between Badger's portfolio and humble Monkey's portfolio is widening and continuing to widen.
Tell us the bad news. I haven't seen the portfolio snapshot. Chuck it on screen. Let's see what's happened.
Yeah, what's happening is that Badger's portfolio is somewhere around the $1,800 mark, approximately. So from a base of $1,400, that's about up $400. Whereas Monkey's more sine wave like uh, graph is hanging around 1,100 or 1,200. So I'm about down $200. So there's about a gap of $600 between Badgers and Monkeys. So in one sense, so far, this is validation to invest only in the best businesses and don't muck around too much, and the results will follow, right? That's your finger wagging. Whereas my bets have all been mostly, I have three companies in my portfolio outside the bets against commercial real estate. I have Coherus and I have EOS, and I now have a Bitcoin miner, Iris Energy. All three of those are small caps, and all three of those have not moved with the market's exuberance, which is an interesting data point that I wanted to run by you or talk through. I'm confused by this market, to be honest.
Mm-hmm.
It's this sense I have that the problems with inflation and higher cost of living and high debt and all that, when the Fed basically said we're about to ease, the market took off. That was about November. And it seems like the majority of companies that benefited from this were the Magnificent Seven and AI companies like NVIDIA. But when you look at the rest of the world's companies, which is basically almost all of them, they're kind of, they're not following along with this exuberance. I don't really know what to make of it. And I'll tell you the one thing I'm hanging on to so far. I know in my investing experience that patience is probably the virtue that will make more money for you than anything else. I can't count the number of times where I was right about a certain company or idea, and the company would continue to execute and the story would continue to develop, but the stock price just stayed the same. In fact, Activision comes to mind immediately. Like there was a several year period where what I just described happened. And then of course, for reasons that I think belong to the complex systems bit, you never know when the price of a equity will decide, in quotes, seemingly out of nowhere to follow the fundamentals. And so as I'm still looking at my portfolio, sorry for this little sermon or whatever it is, confession maybe, I'm looking at Coherus and EOS and Iron, and I continue to really love the story of those three. And I still see potential multi-baggers in all three, but as of now, that ain't happened in the share price. So I'm trying to resort to not panicking, not saying I've been wrong, not getting bearish on them, and staying patient and just letting you spank me for now. Hopefully hoping that by November things will be different.
I suppose we always said right from the start, this is kind of it's a bit of a game for the podcast. It's a bit of an artificial competition because 1 year is not enough time to judge the results of an investor's track record. We had one of our very active subscribers on the Discord a few days ago, or a few weeks ago perhaps, bemoaning the fact that they've been an investor for 2 years and they've only just got back to their sort of starting point in terms of their investment, like their break even, like where's my returns? You can't judge your results over much less than a 5-year term, or arguably a 10-year term. It's just volatility. You could sit at the poker table for 2 or 3 nights. You could win or you could lose heavily. It doesn't necessarily tell you whether you're a good player. That's just like volatility and luck. You have to play 10,000 hours, if you're a live player, like a year plus, before you start to see your decisions washing through just the randomness and to see whether you're a winning or a losing player. And so, yeah, like if you started investing a couple of years ago, this has probably been a pretty hard time for you. And in the game, you've taken a very extreme strategy, and thus far it hasn't played out. And if let's be honest, it's probably not going to play out by the end of the competition. I'm probably going to win the contest. That doesn't mean you were wrong. It just means over the time frame, the arbitrary time frame where the game started and finished, your strategy didn't trigger. Doesn't mean it's wrong, just means the timing was wrong.
Well, I like savable receipts. That's definitely, that quote there is definitely going to be, I'm saving that one. But you're so right. Time frame makes all the difference, and people could get psyched out. In fact, time frame is what differentiates the different games you could play between being, a daily trader doing nothing but math, being a momentum trader, which has a longer time frame, being some kind of medium term swingish investor, and then a long-term buy and hold. It's not that any one of those strategies is necessarily right or wrong, but you need to know the game you're playing with each of them, and time frame is probably the thing that gets overlooked more than anything else, right? Knowing that that's the integral ingredient that tells you how you should act with what you do.
But you're doing the right thing, which is you haven't bought these things and now you're just kind of sitting back and waiting for something to happen. Like, you are rechecking them every quarter. You're reviewing the earnings and monitoring the thesis. And presumably, if EOS, if you finally come to the conclusion this is a dead duck, like the rest of the market seems to think it might be, presumably at some point you will exit that position. You're not just going to hang on just in case.
With EOS, no. The moment something breaks, which in this case would be financing, I would sell unless the stock craters 80% first, in which case the risk, there's no reason to hang on to dead ideas. So, so we shall see. The last thing, though, about this game that I think we weren't necessarily expecting, but that I'm thrilled by is, yes, to make things interesting, you need markers, you need checkpoints. So, of course, a year checkpoint is, call it 1 lap around the track. But the moment we realize that this will be a competition that will be ongoing for years and years, as long as you don't run into a tree skiing 100 miles an hour down a mountain, and I don't know what is it that could some tiger eats me swinging from the trees. It'll be fascinating, I think, for us to see, who consistently wins and what happens to the delta of the portfolio and the compounding effect and all of that. But I will confess to you 100%, this competition, regardless of the small amount that we have in it, I treat those selections, like you were saying, very, very carefully. It creates that competitiveness, creates a higher stakes that are not monetary. And sometimes in life, what we have, the most important things are honor, pride, right? Respect, dignity.
I'm delighted if the game continues for decades to come, because Albert has stopped playing the actual game with me, even though I'm still keeping score. So if I can keep score with you instead, that absolutely suits me. And in my portfolio in King of the Jungle, I mean, I think I own about 8 or 9 things now. These are among the highest conviction stock holdings I have in my real money portfolio. So it totally reflects my true thesis.
Okay. Why don't you tell us a little bit about Neuralink's activities? You're a bit of a sci-fi guy, right?
Yeah, Neuralink have been in the news in the last week. Really incredible live stream that the company shared. They've now got like essentially a real human trial, and they had a chap they've been working with who unfortunately is quadriplegic, so paralyzed from the shoulders down. And in the video, he's chatting to a Neuralink researcher, and the guy's sat in front of his computer and he's playing chess. He's basically controlling the computer, controlling the mouse and the pointer with his mind just by thinking about it. And this is very early in the long-term vision for this company, but this is certainly a really important, tangible step forward in terms of brain-computer interfaces.
It's astonishing. It's really astonishing, especially in the context of AI. You know, one thing, this is a little bit of a segue, forgive me, but who's the man behind Neuralink?
Yeah, it's our friend Elon Musk.
Yeah, and you know what's fascinating to me is his image is now so politicized, polarized. There's so many people who think he is maybe one of the most evil humans on the planet. Just they can't say enough horrible things about his egomania and so forth. And yet, when you think of him founding another company that helps a quadriplegic communicate and play chess with his mind, on top of, electric vehicles being good for climate change. I mean, it's just one of these stories. I don't even know what to think anymore of Elon, whether he's an asset to companies or who this guy is. And so, that's an obvious tangent, not about Neuralink, but.
Well, let me look. So do you know why Elon founded Neuralink? What the long-term vision is for this company? Because it's very interesting. So essentially, it's to prevent like artificial superintelligence taking over the world, and it's to make humans competitive. And so, I believe this is why Elon founded the company. And like we're now seeing, this is like stage 0.1 with this first bit of the brain-computer interface, where now a human is able to control a computer. But at some point on version 20 or something, the vision is that not only are we essentially sort of controlling, but we could also receive information from a computer. And so, like, I'm not probably not a Musk fan personally these days. I'm somewhat ambivalent. His idea here, and it could hold water, is like it's an engineering problem between basically like our ability to have recollection and memory and processing capacity. His idea is a bit like if you have your computer connected to the cloud, and I've got my laptop and it's got it's got like a terabyte of memory on it, and it's got like a little limited processor. But when I log into Google, like I'm running stuff in the cloud on Google's servers, and there I have multiple terabytes of storage and videos and everything else. And if I want to do stuff, I can have it running in the cloud, and then the result comes back to my computer. Well, this is Elon's idea with the brain, essentially. If he can build what he described as a high enough bandwidth connection between the human brain and the cloud, then you heard of brain plasticity?
Mm-hmm.
When you sit behind the wheel of your car, right? And at some point you become a competent driver, unconsciously competent, and the car almost feels like an extension of your brain, right? And you become much more adept at controlling it and reacting to what's going on. Well, Elon's engineering idea here is that if you can build a high enough bandwidth connection between your physical brain and the cloud, well, brain plasticity means that suddenly you'll be using a lot of those cloud processing and storage capabilities just as part of your consciousness, essentially. And so his thought here is, if we can do that, then we become this sort of hybrid artificial superintelligence, as opposed to being that being some like alien thing that we've created that we don't really have any control over. And we hope through solving the alignment problem that it's friendly to us. And I've got no idea. I mean, that's so super science fiction, and we're nowhere near that. Like, we're decades, if not centuries, away from being able to do that. But this is unarguably a step towards that.
I'll say, I think about this a whole lot. That I think we're already cyborgs. When I look at the students in my classroom and the level of addiction they have to the phones, they're already. It's just the gadgets just happen to be in their hand. To me, it's a matter of degrees whether the gadget is in your hand and you can't stop looking at it, or whether it's some wetware implanted in you. People are voluntarily implanting their gadgets already. The other thing I want to say is there's a fantastic resource about the origins of Neuralink by a fantastic online blogger, Tim Urban, at a site called Wait But Why. If you Google Wait But Why and Neuralink, you'll get to his many, many, many page detailed understanding of both the brain and what Elon is doing. And then the front of that blog is a little cartoon. He draws fantastic stick figures where you see two stick figures talking to one another. Elon says, hey, hello. And he says, I want to build a wizard hat for the brain. As what this company is doing. So that's right, Badger. Because AI wasn't enough for humans to contend with, now we have, this company turning us into literal hybrids. It's a wild time to be alive.
Well, and it's interesting as well, right? Because Elon is famously suing OpenAI at the moment. And OpenAI was supposed to be another one of his attempts to prevent artificial superintelligence from killing us all. And maybe arguably OpenAI are probably, one of the closest, a lot or furthest down that journey, maybe DeepMind and a few other labs as well, Anthropic. But Elon believes they're not fulfilling the OpenAI aspect of their mission. And so he's taken them to court over that for perhaps misusing his shareholder funds and the PR that he's brought to them by associating his name with them. So hopefully Neuralink doesn't go the same direction, end up doing something dreadful that's kind of off mission.
To be seen. And speaking of to be seen, rumor has it I'll be seeing some kind of furry critter making his way to Austin, Texas in a couple of days. So folks, stay tuned for some what might be wild and crazy adventures.
So we're going to post today's episode on Tuesday, which is the day I'm traveling to Austin. So if you listen to this and if you've got any thoughts on challenges, adventures, content that we should record when we're in the same room, arm wrestling, who knows what, then let us know on the socials. Give us a like and subscribe, and give us some suggestions for antics we should get up to over the rest of this week.
Indeed. And if you haven't yet, please check us out over at wallstreetwildlife.com, where we have the 10 laws of the jungle ready for your downloading pleasure. These are the laws that will make you a better investor.
We're both tweeting furiously or posting furiously on X. You can find me at 7LukeHallard.
And I am at 7FlyingPlatypus. It's been a pleasure being with you today, Badger, until we meet in the flesh or in the fur.
Couldn't look forward to it more. Fantastic.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.